Alright, so let's just look for trades that happened today. Take a look from this top. Market bounce over here with a pretty big wave, right? So there was some strength over here, probably because it was tapping support and it was lack of supply here. And then what happened? Market rallied. Right here, you see a pretty big wave. Now the mistake this is where the mistake is made. Just because there's a big wave doesn't mean that there's going to be an uptrend. All right, you have to see how the reactions occur. And you see that after this big wave, you still have a big wave down. Fifth biggest. So is that bullish? No, obviously it's not. So a lot of times what happens is it's a sell to buy or a buy to sell. In this case, it's a buy only to sell. Okay, and when that happens, well, a lot of white coat traders they think it's a change of behavior or a sign of strength. It's neither. All right, it's neither, because remember the situations. Yes, scenario A, it's a change of behavior. Scenario B, it's a sell to buy or a buy to sell. Scenario C, what? It's some type of short covering. So in this case, you bring it up, test whatever level, and then let the selling commence. In this case, that's what happened. Selling commenced and continued to go. There was a minor rally here, but no cigar. And instead, the rally said downside basically took over. So. Tap. There was a big wave here, buying pressure, but again, all it did was test. You know, so just because the wave is big, it could be a lot of other things. Like one possibility is that it's a test. All right, now folks may call it mitigation or whatever. It doesn't matter. It just goes, tests. What did it test? I don't really know, but it seems like it tested this heavy pressure. This is where the break is, and it's test, retest, and then continue down. So you just wait. Finally, you get a big wave, but the pullback is don't take it. Although pressure did come in, and you had a move, there's no real lack of supply here, right? Yes, you can view it that, okay, it pulled back, it tested, and that's where the pressure came, right? With big green. And yeah, you're right, it did, and it caused this rally, but only to sell off. So, I mean, this is like a minor counter trend or a pullback to the bigger downtrend. You know? So, bottom line, there's no real trades. Right? Now, there's no turning point trades, but there are continuation trades, right? Like the worst one was right here where you had the rally down and it offered a test, but it only gave 1, 2, 3, 4 bricks. So this would have been a break even. Then here, the rally started. And this I kind of like because of the pressure. Right? When you have a rally, you want to evaluate it again. It's pretty much the same way you evaluate big waves or change of behavior, or whatever. And it doesn't have heavy volume bricks. So is there a breakout in it? Is there a high volume reversal in it? You know, you want to see that strength of supply or that strength of demand on an up wave. So here in the rally, you got this little red bar. That bar is the biggest volume in about 27 bricks in that little thing. And what happens? Gets tested and retested. As long as it has some pressure as gauged by volume and has follow through, right, then that's a very good sign that the pullback is going to hold. So you had more rally, and these are continuation trades. Like here, you had a rally. What happens? Test. Right there. And then it goes. That's what happens. Here's the heavy selling pressure that caused the rest of this downtrend. So this is the point that I'm trying to make. Is very simple. There are two types of trades. There's the turn, and then there's the trend trade. Okay, in my opinion, you should have the turn trade set up and the pullback in a trend, which is basically, the continuation setup. There's only those two types. Either you're trading, with trend, or you're trading as the trend turns and creates a new trend up, right? So in this case, when you have, all right, maybe I'll say it differently. When you have those trend days, do not look for a turn. What you want to look for are the rallies and just jump in. But these days, they don't really occur that much, right? They're less frequent than range-bound days or dull days. In those days where the market is just range-bound, it's not that fast. It's maybe, medium. It's just playing that support and resistance game. Those are the best days to take turning points. On trend days, you want to take continuation trades. Again, in range-bound markets, where it's like normal support and resistance behavior, you take turning point trades. They work very well. And in trending days, where markets are marking up or marking down, you want to take the continuation trade. All right, so it depends on the type of day it is, the type of trend, the higher time frame, whatever you want to call it, and what's going on. If it's range bound, you're going to get like 2 or 3 turning point trade opportunities that work. If it's continuation, the turning point trades don't work. Here's the case in point. Here you had a turn. You had all this pressure right here. The 10 and 25 right there. And you had all this pressure here. And what happened? It did go up, only go back down. Meaning it couldn't trend up. It just went up one leg and then lost its momentum and went down. So the turning point trade did not work there. Where else? I wouldn't consider this, but this is the biggest volume in about 10 waves, but I wouldn't consider it like, maybe, right? It's like this. They attempt to go higher, but it just sells off because of the trend day. So turning point trades that are counter trend have a very high likelihood of failure in trending markets. All right, and if they do work, they'll give you one leg and then break. So you must understand the context, right, and the type of in day trading, like what type of day it is in terms of, is it trending or is it range bound? Is it one of those normal days? If it's a normal day, you can easily get turning point trades. What you don't want to do, and this is the real rule here, be careful of trading turning points against a market that is marking up or marking down. So that's it. All right, take care. Bye.